The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Let's take a look at, first of all, the S&P 500, the September. This is the chart that we've been looking at since Monday. We have a 61% Fibonacci ratio coming in at the 2051 level. We hit 2051.75 twice, once about 4 or 5 hours ago, and just recently. So this is going to be interesting. There's also that ABCD pattern that is there at 2044. Folks, we're having some selling across the globe. The real problem is coming from Japan. I wanted to give you what I think is some information that's relatively important here. The first chart I wanted to show you here is the really nice pattern that we had last afternoon in the Japanese yen. That we had a really nice three-drive pattern. It was right at the 1.618 level, at 105.40. We rallied well over 65 pips in that, which is a lot for a foreign currency. But what happened after the market opened in Japan is what really sparked this whole thing. And I wanted to just give you a quick idea of what the chart looked like, because we did have this rally that extended up to that 106 and change level. And then you'll notice that once the Japanese stock market opened, it literally just fell out of bed. They were giving free money away here. I happened to be up watching gold because gold was getting ready to make a new high, which it did, but the easy money happened to be once we broke that 1.618 level at 105 in the euro yen, and that's the one that made, not euro yen, the dollar yen. And of course we got all the way down to the 103 and change level, which is that first 1.27 expansion, on the long-term figure. So this is another reason to think that something big was happening, over in that Japanese market. I wanted to show you the expansion here. You'll be able to see it quite easily here when you look at this on a 4-hour chart with the Japanese yen. And that's what I usually do. I go to a 4-hour to an hourly chart just to try to see that I see some major patterns, and we have some pretty strong support that we hit at 103.80. We rallied about 50 or 60 pips, a little bit more than that, off of the bottom. But that's not the problem. The next few minutes here, I'm going to give you a 10-cent lecture of what I think is the real key, to cycle stuff and things that we look at. The first chart I'm going to show you here is the Nikkei, and this is over the past year. And as you can see, we've been in a major downtrend. We had the big ABCD pattern ending on February 8th, just 10th, just like we did with everything else. And then we had a pretty good rally. And you'll see that rally was exactly like the BC swing that we had from September through December in both price and time. So it fit up very, very nicely. But you'll notice in the right-hand corner there, we're down 450 points today in the Nikkei. We have broken below the major support that is here. Now, the reason why this is important, and believe me, I've studied cycle theory for a long, long time, and I spent a lot of time with the Jim Hurst book, The Profit Magic of Stock Transaction Timing, and with Dewey's work at the Foundation for the Study of Cycles with the help of Gertrude Shirk. And it's just really amazing here what we're seeing here in the Nikkei, folks. You're going to be looking at one of the most bearish patterns that you could possibly have in a stock market. Let me try to walk you through this. This is going from 2009 when we hit 7,400. Remember, this had topped at 39,000 and change on December the 31st of 1989. So that rally back at 21,000 was, hardly more than a 38% retracement of that move. I believe it was either 38 or 50%. But what's happened since that time is what's important. If you'll notice the cycle that's in there, that's a 96-week cycle, roughly almost 2 years. And we had a really nice bottom there at 14,000. We rallied up to 18,000 just about 10 weeks ago. That was the chart you'd seen previously on the daily. This is the weekly. But you'll notice the ABCD pattern that you have there at that 382. That's a perfect 382 off of the high from 2015. Both of those rallies, the one we had in the BC swing and the one we had just recently, are almost exactly equal. And now what we're doing is we're taking out those lows below 15,400. And this sets up an ABCD pattern, all the way down to 12,000 in the Nikkei. That's a long way from where we are. That's 30% away. So there's a good chance that we're going to see something really dramatic happening here. Now, this is a market, when you talk about cycles and stuff, this is a market phenomenon that Jim Hurst talked about and also Edward Dewey talked about, and that is a high translation. In other words, if you look at those cycles at the bottom of the thing, you notice when the market is going up, the cycle crests on the right-hand side of the cycle. But when the prices are going down, it crests to the left-hand side of the cycle. And that's what we're doing now, is we're having high translation to the left, which is extremely bearish. And this, especially the fact you can only get a 382 retracement over the last 8 or 9 months or 12 months. So it's been interesting here that we do have this extremely bearish setup, and it could certainly cause a great deal of problems in Japan. And remember, folks, the Japanese stock market has been buoyed, that's the word, buoyed, by the government. They've been doing all the buying. Now, who's doing the selling? If they're doing the buying, my question is to anyone that wants to ask is, who's doing the selling? What's going on there? Something's not right. That's neither here nor there. But that's a really important concept. Of all the work that Hurst did, that was by far the best thing that he did was the high translation. His nominal cycles and other stuff was okay, but it's really it's interesting that we're seeing this very, very negative. If you remember, we saw this several times. Just recently, we saw it in the Hang Seng. We saw the same thing with that high translation. And that's what we're looking at right now. Okay, let's switch over here to the gold market, because we are making new highs in the gold. And again, I wanted to talk just a little bit about what's been happening in the gold market over these last few days. I talked about it yesterday, and the fact that all we've been doing now after gold, it comes back and it drops somewhere between $10 and $12. It did it on the 9th, it did it on the 10th, it did it on the 12th, it did it on the 13th, it did it on the 14th, it did it on the 15th, and today's the 16th, and it did it already. If you'll notice here, we went all the way up, excuse me, we went all the way up to $1,317 an ounce. We backed off $12 an ounce to $12.05, and then we rallied back another $10 or $12 since that point. So I'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, one of our listeners here at TFNN, one of the Tiger members in the den, posted a thing from Zero Hedge showing that the Japanese central bank is a holder of about 90% of Japanese stocks. God help us if that's the right figure, because boy, oh boy, that's who's selling? That's the question. So we'll take a look at that. Anyway, we were talking about the gold, about how it's been repeating these same moves. All I did was I went in with an hourly chart and did the same thing on silver. And as you'll notice that it's had the same 3 moves over the last several days. Each one of them is at a higher low, making either a perfect 61% retracement of the previous low or a 78% retracement of the previous low before it went in to new high ground. Folks, gold has broken out. I don't know how high it's going to go from here, but the only thing that would make me even slightly bearish on gold, if we were to close below 1,300 dollars announced today, then I would say, yes, maybe there's some type of a pattern up in here, but I frankly don't see it. This thing's got a chance to really go. Even when it's backing off intraday, when we went to, 1317, we backed off to 1305, and buying came in, immediately. So unless we get below 1300, I would say, it looks like it's going. I know silver has not made new highs as of yet. But and the other thing that's negative to this is the fact that platinum can't get out of its way, and it's just looking horrible. It barely took out yesterday's high, and that might mean it might catch up, but that's just one of the things that you're sort of keeping in mind. The thing that to me that is the clearest of anything that I see in the markets is the fact that these interest rates are on the death's door as far as getting ready to go lower in interest rates. I know I'm probably the only person on the planet that sees that, but I'm looking at the Dow Jones Utility Index making a beautiful butterfly pattern, as is the majors of that: Duke Energy and American Power, AEP. All of those are making perfect patterns, and the long-term utility index is doing exactly what it was doing back in 2007 when it made a higher high and then did that flying Melinda, that took it down from, more than 50% in a matter of 13 months. So this is not the time, to be buying utilities in search of a yield, because that's the wrong thing to do. Bernard Baruch, in his autobiography, My Own Story, said that's one of the classical mistakes that people do, is they're always concerned on the return on their money, but they should be concerned on the return of their money. I recommend anybody that has a chance to read that book. It's called My Own Story by Bernard Baruch. He was offered the U.S. Treasury job several times. He was a good friend of J.P. Morgan and also President Hoover, but he preferred to be left alone doing what he did, and he was very, very good at it. Okay, let's move on. We've covered the gold, we've covered the silver, the oil market. The oil market is starting to move down towards the level that our good friend John Logan had pointed out, right around this $46 a barrel level. We're not too far away from breaking $46. We got down to 47.02, and another $1.50 lower would set it up as a very interesting spot to take a look at it. Those are the ones. Now, the currencies are a whole different matter. We're seeing a lot of strength in the U.S. dollar. The euro had a rally last night, again up to the exact 382 of the previous swing, and it's already broken 140 pips to the downside. The pound has broken well over 100 pips to the downside. And so we're seeing situations, and we already know what's happened to the dollar yen. That's what's really happening. Now, we have a lot of support in the S&P at that 2051 level. There's three major numbers that come together at that point. And given the fact that this market has hit, seeing what's happening in Japan and all across Europe and in Hong Kong and in China, the market is holding up really well. So watch the number of 2051, which we've hit twice now, and also pay really close attention to the fact that there's an ABCD pattern that comes in at 2044 on the S&P that also has to be taken into consideration. And the reason for that is it's over a period of several days that this pattern has formed. I'll bring this up to you so you can see it, and you'll watch what it looks like, and we'll see what it looks like. Someone's asked a question here about the meal and the beans and corn. Basically, I'll try to post some charts, at the break. But we mentioned this week, early in the week, that we were seeing drops in open interest as they were going up. That was a huge sign of some serious problems going on. We've already broken 70 cents a bushel in the in the bean market, and we've dropped 10% in the value of meal. Meal has dropped from 440 a ton to $400, and so that's another big sign that something is happening. We just did not have follow-through buying on the upside, with new buyers coming into the market. And folks, we're seeing the same thing happening in the Treasury bond market and Treasury notes. There's no big expansion in open interest at this time, so that's another sign that we're looking at something really serious here in the market, and whether that's going to mean very much at the time, we'll have to wait and see. But it's something we should pay close attention to. That if you're not expecting something that no one else is, then you're not doing pattern recognition, because you should be able to anticipate what some of these things are doing. Now, I wanted to mention to you, yesterday we talked about the German Bund. And the German Bund went up and made a 1.618 expansion exactly to 165.60, which was absolutely spot on to the 1.61% retracement. And the interesting part is, if you'll look at this next chart that shows what's happened today, is that the Bund went up and actually took out that high from 2 days ago on the 9th by one tick. and then immediately started to sell off. And we were seeing the same situation occurring a little bit, in the Treasury bonds. We've got a lot of resistance up here at these old highs at that 170.28 level. And whether it's going to be turning or not. Remember, we have these big cycles this week that started on Monday and Tuesday. Here we are into Thursday. Those are those larger Neptune and Saturn cycles, and they have been pretty accurate given the information that Norm Winsky has given us. So we'll keep a really close eye on that. I had a request here from. It wasn't from our good friend Priceline Charlie. It was from somebody else, and I believe we're going to have to do this at the break coming up because this is going to take some time. It's on the price line and what the pattern is there, but we'll look at that as we come up to the break. Another question's come up about the Brexit thing, folks. Who knows? You take a coin, flip a coin, just like being in Greece, being out of Greece, years or months ago, same type of thing. But we'll have to wait and see till the 23rd. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we are looking at a market that is, hold on, I got to turn off a few limits that are going on here. I have a limit on if we get below the $47 a barrel level in the crude there might be a little bit of support down there, but the real major support comes in around 45.70. That's the same retracement that we had back in March, where we dropped a little more than 13% from the high. That would put us in pretty closely to the exact number if we get to that spot. So we'll be watching that very, very closely, as well as we're watching that area of 2051 in the E-mini S&P to see if it's going to hold that level. So those are the key ones that we're following right now, along with the Treasury bonds. We're going to see if they're going to be able to make those new highs. We're having a lot of volatility in the bonds, folks. They're moving around a point and a half like pork bellies used to, which is an ideal situation that you like to see. All I can say is these patterns that we're looking at here have they're really all coming together. If you look at the utilities and the major utility stocks within that index, along with the notes and the bonds and everything else, boy, there's a lot of patterns in here. That don't mean they're going to work, but it just means that you got to pay attention up in here. So those are the ones that have my interest at this particular time. And I have been trading all night, basically in the Japanese yen and the gold. I was looking to, once gold took out the high at 1306, I bought it, and it rallied $11, went to from 1306, it rallied up to 1317, and I got out at around 15 and a quarter. I haven't been in it again. I tried to buy it at 05. It got to 0550 and I missed it. But the good one was the Japanese yen. It dropped 200 pips straight down with no heat at all. Once it broke through 105.30, 105.40, it was just literally a free fall. You could have got your shorts off without too much trouble, but it was just I don't know who was scale down buying, but boy, they were getting hurt because it just kept dropping rapidly to the downside. So we're going to have some real interesting swings here, given the fact that we're starting to see more volatility in the bonds and the notes, and also in the currencies, because that's money moving, folks. That's real money, especially the currencies. When you see these 150, well, we've had a 250-point move in the yen in one day, 200 points so far in the almost 200 points in the euro, the pound not so much, but we're starting to see some really good information here as far as volatility coming through. And we're starting to see, the VIX index perk up quite a bit. We've got above 20 in the VIX now, which means somebody's taking some protection against some further moves in the market to the downside. So those are the main ones that we're keeping an eye on. I still think that the best thing to look at these things are these long-term bonds, and we'll see what that thing is going to be looking at. We've got the VIX trading at a little above 21 and change right now, and that's the major thing of what we're looking at here to see if this is going to be it. The real key here, folks, is the Japanese stock market, folks. That thing is flat out as bearish as you can possibly get. If you go back and, just like Twentyman says, defy human nature, do the work yourself, go back and see how many times after you've had a 382 retracement and the market collapses, what's happened under that scenario. We saw it in crude oil last year. We've seen it on the upside in the gold market. And, it's just really, it's an amazing phenomenon that when you have that cycle heading down so early, on a weekly cycle, that it's extremely bearish. And the only thing that would turn that around would be to see about a 2,000-point move up in the Japanese yen. But if the Japanese government is buying the stock, who's selling it to them? That's what I'd like to know. That's the key to figuring out whether you think that's going to be it or not. Who knows? I don't know for sure. Okay, I wanted to talk a little bit here about soybeans here because we've had a pretty good sell-off so far in the beans. All I'm going to do now is to put up the chart of the November beans over the past 3.5 weeks. As you can see, we had a ABCD 3 drive pattern form here 5 or 6 days ago. And remember, this is going on when open interest is not increasing and at a very good rate. And on several days, it actually decreased. That's telling you that there was not new buying coming in. And now what we have is a potential ABCD structure coming down to a 61% retracement down around the $11, it was $10.99 a bushel would be the next time. That's another 25-30 cents from where we are at the present time. So I would be looking at beans from the long side there because that would be our first good ABCD correction over the past 3 weeks. And as Gartley said, look to buy ABCD corrections in a bull market and sell ABCD corrections in a bear market. Those are the things that you would most probably, because that forces you to trade with the trend. So that's the main thing. I've had a request from somebody to talk a little bit more about this breakdown in the Japanese yen. This is something that I've been sending out to my subscribers several days now about this because it's been in a real a critical level. The first one I'm going to do is to show you that the fact that we had this 382 retracement up here at this 105 and change level, and you'll notice it was trading when I sent this out at 106.91 and below 105.50 sets up much lower prices, either to 102 or possibly even down to 95, and 95 is nothing more than a 61% retracement of the move from 2011 when our fearless leader, Tom O'Brien, coined the phrase King Dollar. So there's a possibility there. But that's the first chart that alerted us that something might be wrong. And then if you'll notice this chart right here, which I sent out early last night, you'll notice that once we broke below there, once we broke the 105.40 level, by the time I was able to prepare the chart and get it ready, which took about 15 minutes, we were already trading 60 pips lower. It was just straight down, pip by pip. There were a couple upticks along the way, but that's what's happened. And we've gotten all the way down to the 103.80 level, which we've already pointed out, but you can see the 102 level. That'll be major support because that's where the market broke out of, during the 2012-2014 levels. So those are the things that we're watching in the yen, but they don't always work. You have to remember that they don't always work. Some of them work better than others, but you have to protect yourself because like everybody else, you're going to be right sometimes, you're going to be wrong sometimes, and the quicker you realize that you're wrong, the better off you're going to be. And that's a very key thing to remember when you're doing this trading stuff. As far as the Federal Reserve, what they said yesterday, frankly, I don't know what it means, but I don't think anybody else does either. 877-927-6648.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we've got a caller from Florida. Bill, are you there?
I am, Larry. Good morning.
Good morning to you, my friend. What can I help you with?
Larry, given what appears to be the unprecedented volatility in the markets worldwide across all of the instruments, I'm wondering if you're seeing anything different from your years of experience. Is this kind of a new era we're entering into in regards to the unknown and volatility, or are we just looking at what potentially could be a major correction around the world?
Oh, I think it's a major correction around the world. We talked about that last week and again this week. If you look at China, the emerging markets, Japan, and especially looking at the Nikkei, it just looks horrible. And, that everybody thought Japan was going to bail everybody out. Well, they realize that's not going to happen now. But we've had very little volatility since 2009, Bill. We had a lot during, 2008, 2009. That ended on March the 5th. And now I believe we're getting ready to see something, really explosive. Now, the fact that we've got the VIX up above 21 for the first time in a while is also people are taking some protection in this, but we haven't seen anything like that. The Japanese market was down almost 3.5% today. Hong Kong was down 2.5%, and we barely moved. 2% in our market, would be, but we're not seeing them right now. So I think volatility is just getting started.
Well, Larry, and I think. Obviously, there's never been more debt held by governments and individuals around the world. I'm wondering how that will affect. We're at an unprecedented level of debt in the world. We've never been here before. I don't know how that plays out. How does it unwind? Who gets left short?
Yeah.
Somebody, obviously, in this game of musical chairs, somebody's going to come up short.
I think so. And, I think what happened over last night, and that was one of the reasons why I was up all night watching the yen and also the Nikkei, but I was interested in the dollar yen, of course. But the fact that they might have went all in. Japan might have called uncle, and this might be what's happening over there. I don't know. One more bad day like what happened in Japan last night, and we're coming into Friday. Tomorrow is going to be an interesting one because we have a weekend coming up, and if they close badly there, boy, that chart is going to look even worse than it already does. So it doesn't look very good. I think that's the canary in the coal mine. People are looking at the Brexit thing in Great Britain. I don't think that's going to mean very much at all. But the thing in Japan, it's the third largest economy in the world, and look what the chart looks like. I mean, it just looks like a falling safe.
Larry, the last
and
time
they have the highest per capita debt. Yeah.
Yes.
Go ahead, Bill.
Yeah. Well, in the turmoil in 2008, if I recall, I think the market actually corrected on a short term, maybe 30 or 40, maybe even 50%, but within a matter of days, it had come back, to a more normal correction. Maybe we can anticipate that again in this situation.
Oh, sure. Yeah. Of course, we're going to have huge swings, and that's what we like to see. You like to see these big swings. What the Fed has done with quantitative easing is try to expand the business cycle. In other words, we used to have these 4.5-year, recession and expansion and stuff like that, but all they've done is just pushed it out, and we haven't had much expansion. It's just been no recession. And of course, there's a recession to people that are out of work, and many people have left the workforce. But I do believe we're going to see pretty wild swings in here with great opportunities on the long side and the short side. But everybody should own some silver. I keep saying that, and I just in case, you just never know with these people. The old thing on my refrigerator, back when I lived in Westlake Village, there was a little plastic sign that someone made for me. It said, "The man who makes the rules owns the gold." No, it said, "The man who holds the gold, the man who holds the gold makes the rules." So always have a little bit of silver and gold. Are you still there, Bill? Oh, looks
yes,
like.
thank you.
All right.
Thank you.
Hey, my friend, listen, thanks for calling in. I really enjoy talking to you. You bet.
Thank you, Larry.
Okay, I hope you bet, my friend. That's my description of what I think quantum is. I don't think it's going to work. I never thought it would. And as Bill was asking, who's going to be left holding the bag? Well, the people that issue the debt will be the ones that are holding the bag. So that's the way it looks to me. The big winner in this, folks, is the Federal Reserve, the American Federal Reserve, because they issued Treasury notes. And what did they do? They bought bonds with that. And what have bonds done? They've gone straight up. So they're the big winners of that. They buy the bonds and they put the Treasury notes in circulation, hoping for the economy to be stimulated, and the only place the stimulation occurred was in the tellers' trays at the major banks that were too big to fail. Folks, this all shouldn't be happening, but President Clinton, in his last few months of office, I believe, repealed the Glass-Steagall Act that prevented commercial banks from going into investment banking from the 1930s. That had been good forever. And when Mr. Clinton, President Clinton at the time, repealed that, that allowed them to do whatever they want to do, and they're continuing to do it to this day. And we should not be surprised because it's run by the Federal Reserve Bank, which is a private bank for bankers. So don't be surprised. They're not hiding from you. They're just showing you what they're doing right in plain sight. So just be careful of what you see going on, because it's not always what's going on. We come really close to that 2044 level in the S&P. We're still 4 points away, and that number is pretty strong. So I would certainly not even want to think about a long position in the S&P until we got around 2044. And even then, I would want to wait to make sure that we got to a spot where it'd be really good, because you've got a 1.27 expansion number at 2045, and you have a 1.618 expansion at 2044. So 2044 is still, is if you buy at 2044, you don't have to risk more than 3 points on the company, because those numbers, when they fail, perfect example is what happened in the Japanese yen last night. You can see once we went below 105.50, it was sayonara. And one almost 200 pips with virtually more than a 15 or rally all during that time. So every time you sold a new low, you were rewarded, very, very nicely in a really strong trending market. Gold had pretty much the same thing going on through the 1306 level. And you see that level.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, boys and girls, this is Billy Ray Valentine from the offices of Duke & Duke, Philadelphia, Pennsylvania, 100 South Broad Street. I was in the bank yesterday trying to get a picture of the partners' room that we saw on the movie Trading Places, but unfortunately they don't even give those out anymore. But I do have one back in Tucson, and when I get back home, I'm going to put it up and post it in the room so you can actually see the desks and everything that were there just right directly from the movie. The key thing to watch today, folks, is to watch the 2044 level in the S&P. Going below that has incredibly bearish implications. So just pay very, very close attention to that. That's equal to what happened in the Japanese yen breaking the 105.50 overnight. Also, remember that the Japanese stock market is in an incredible bearish situation, almost to the tune of a major collapse, possibly, and that is because it made an ABCD correction over a 15-week period, only going to the 38% retracement of the high from 2015 to the exact point, and then has been going down, and now it's starting to accelerate down even more so. So we have a price objective somewhere between 12,000 and 1,000. In the Nikkei, it's trading at 15,000 right now. So those are the things to watch. The bonds, they've already, they're going to go up and take out those old highs. It looks at 171, but we need to see what happens, the rest of the day. But the major utility index is still making major butterfly patterns at 1.618 expansions. Very hard to be bullish on utilities at this level right here. So we're seeing volatility, folks. It's starting to increase. We're seeing it in the currency markets. It started there first. The gold and silver are up a little bit, but look at the stock markets around the world. The DAX, the FTSE, all of them. They're all getting hit hard. And if somebody knows something, they haven't told us yet, but they can't hide from you. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.